Sri Lanka's most powerful news brand.
Hello, good evening and welcome to Biz First Review 360. It's our final show for the year. 2017 has been a bit of a roller coaster. Some ups and some downs, more downs than ups some might say, but as I always say, always look for the silver lining. So to discuss 2017 and the hopes that we can have for the economy in 2018, we're joined by the Chief Economist at the Ceylon Chamber of Commerce, Shiran Fernando. Shiran, what was the silver lining in 2017?
Before I start off with that, let me first wish our viewers a very Merry Christmas and all the best for 2018. But 2017, I think, yeah, as you mentioned, had a lot of ups and downs. If you were to see some of the ups, I think what you had prior to it was a lot on the agenda of the government in terms of what they wanted done in the reform agenda, and you didn't have too much of that checklist sort of ticked off. But I think the key thing that they've sort of maybe nailed down and got down to doing is the new Inland Revenue Act that sort of was supposed to be finalized in March, but because of the consultations that were required, the changes that were required took a bit longer than expected, but it got done in the second half of the year. And that was essential because you need to sort of address the indirect to direct tax shortfall that we sort of have towards indirect taxes. So with that coming into force from April next year, that was, I think, a key agenda item that was ticked off. Then we also had, if you looked, we also had a national trade policy that was put out as well. So clear guidelines as to what the policy is for trade, and complement to that, we're having a national export strategy, which I'm expecting would be out as a public document in January, or at least in the early parts of next year. So a lot of what was being talked about over the last 2 years, I think, has seen the light of day. And the other piece of legislation has been the new Forex Act as well.
From the academic point of view, so
yeah,
from your point of view as the economist, that's very important.
Yeah.
It's very important for the country as well to have these set guidelines and policies, to have the path mapped out on which way we are going to go. But a lot of the complaints that you hear from lay people is that, you know, there's all this talk of consolidating our revenue streams and minimizing our debt burden, about making the economy work better. But the indicators, the numbers, what people say is that tell of a story of suffering and poverty. Is what people make it out to be. So while there has been key changes in terms of reforms, in terms of legislation, you mentioned the Foreign Exchange Act, the Inland Revenue Act before that, and at the beginning of the year the Right to Information Act came into force, and it has been used to great impact since then. But that's all things that have happened in the halls of legislation and in the back rooms where the policy dialogue is taking place. In terms of concrete moves towards development, what does, for example, the projected growth rate tell you about where the country is going?
Exactly. So I think what we are seeing, especially probably in the policy dialogue, is steps being taken, or at least the right steps finally being taken this year. What we are yet to see is that translation into the livelihoods of people, which I think should be the end objective of this. None of these are not going to change anything overnight, I think, and it'll take another few years. But what we've sort of maybe had to deal with is three, bad harvest, flooding for a consecutive year. You had in May 2016 as well as 2017. So those impacts having an overall impact not only on the cost of living in terms of prices going up of vegetables, rice, but also in terms of what it's done to growth. GDP growth. So that side has not really done or performed well and been very much below par. But that's where these reform initiatives need to show some level of, opportunities for businesses, which in turn will maybe create more prosperity for the general public itself. But I think it took 2 years to maybe stabilize the economy. Maybe 2017, when we look back.
Why did it require being stabilized? A constant argument that is put forward by detractors of this government is that they took an economy that was doing okay and they ran it into the ground in the space of 2 years. Is there any merit to this argument?
It's difficult to say that it was okay, because I think the path that it was on was largely, debt-driven investments and you could sort of see it now, where you're not seeing the fruits of it, repaying some of the loans and things like that we've taken on, some of the port investment, some of the airport investment, and other big investment that we saw post 2009. It should have given some level of revenue to the government by now, so that hasn't really worked out. So, and that is not a sustainable, way of going down that path, and that requires every year you go out, you raise debt, you go out to markets, you raise more capital, and keep refinancing that on. Plus you get whatever you get from these projects. So that strategy wasn't sort of maybe working out, and I think the policy shift that the new government, or the government that came in 2015, took too long to implement, or was not clear to the stakeholders, and maybe the delay in the lack of implementation sort of maybe aggravated the problem, and that required the IMF package, for example, coming into being in 2016. You needed to reassure some of the foreign investors, because they were not sure of the overall strategy that the government was trying to communicate. So 2017 in that sense needed to be that year of stability, and you've sort of seen that, I think, on a macro basis in terms of some of the numbers, but yet to, I think, see it having a lasting impact for the livelihoods of people.
You mentioned the problems that we've been having with drought and floods, and the impact that it has had on agriculture and the food security of the country. Now, it's to be expected that similar weather patterns will be seen in 2018 as well. Scientists are fairly certain that in May 2018 we're going to have floods again, and that there will be an alternating drought as well. There doesn't seem to be an end in sight, if you ask the climatologists. But so you said that, okay, they needed this time to sort of to stabilize, to take stock of these problems as well, and to put in the policy reforms to ensure. But given that we can expect more of the same from Mother Nature in 2018, are we ready to face it? Will 2018 be better?
So I'm not a climate expert or an expert in that field, but I think if that is what the experts are saying, the government needs to be ready for it, because you can't have a situation where you suddenly have to import more oil because there is drought conditions. That's what happened at the start of the year, and that put off that started the year in 2017 on a negative footing, because we had to import more oil for electricity as well as for vehicle consumption and things like that. So that was due to a lack of maybe preparation, and you can't have the second quarter once again having this impact from floods. You can't stop it, but I think you could maybe prepare for it, because twice earlier you got impacted from it. So if this is what the experts are saying, I think the government proactively now needs to not get sidelined by it for a third straight year, and therefore not again, if you do this review at the end of 2018,
we're talking about the same things.
Yes.
Well, we did do it at the end of 2016, and we were talking about the same things. If there are droughts, if there are floods, how we're going to deal with it, and we were prepared to deal with it.
Overall, food security is a big priority, and that should be, because I think we've just come down a few places in a global index on that as well. So that should be a high priority, while you have all these macro policy reforms that are taking place as well.
If you had to pinpoint the cause of the problem in Sri Lanka, regionally, Sri Lanka is one of the countries which has the highest food prices. The cost of food is extremely high in Sri Lanka compared to other countries in the region. If you had to pinpoint the cause of this problem, what would it be?
Well, I think it's maybe to do with what we're sort of maybe even growing in Sri Lanka as well, whether we're actually catering to the market, and how much we're sort of maybe importing as well as a result of it. And you can even see with rice, the level of imports that we need to do when there is when there's an onset of a drought or things like that. So it's very reactionary. The process is very reactionary, and as a result, prices suddenly surge, slump, become quite volatile. So there isn't, I think, a proper planning process towards that, and that's the whole agricultural reform that we need to sort of start seeing. Maybe even consider moving out from the traditional agricultural exports to more even agri-tech based produce, as well as looking to export that to actually
so you think
improve
that
the livelihoods.
lack of advancement may have some role to play in it?
Lack of advancement, maybe
And
the lack of use
diversity.
of technology, maybe less government support than needed. All those factors are contributing, and it's not helped by the onset of floods or droughts.
We'll be right back after this short commercial break. On the other side, we'll be talking about the policy reforms that the government has undertaken, the policy documents that have been released and that are to be released, and whether a government with conflicting ideologies can weather the storm. At a press conference convened this week, the governor of the central bank, Dr. Indrajit Kumaraswamy, had a mostly positive outlook on the state of Sri Lanka's economy. However, he did highlight a key issue. He noted that for the first 9 months of 2017, the central bank has calculated economic growth at 3.7%. Growth for the third quarter was at 3.3%, if I'm not mistaken. We're in conversation with Chiran Fernando, chief economist of the Ceylon Chamber of Commerce. One of the factors that were highlighted by Governor Kumaraswamy was that this growth rate, it cannot be pumped up artificially, and that it is important that the reform agenda is on track and that it is implemented. One of the issues that has plagued this government from the time it came into office is that it's composed of two opposing parts, and that conflicting ideology has constantly been displayed. Although we say that the UMP is handling the economy while the SLFP is handling other matters in the government, there has been that conflict that has come out. Do you feel that this sort of formula, this political formula, is holding back the economic reform agenda?
So I think that has been maybe a reason why we waited maybe 2 years for some of the reform things to get done. But what you've seen even as a result of it is, for example, with the appointment of the governor of the central bank, was a common maybe choice of both coalition parties. Previous to that, you might not have a situation such as that. But with what he's brought to the table, he's sort of brought a lot of confidence back as well. And the interesting point I think you mentioned of what he said, that you can't resort to giving maybe boosts, artificial boosts, which in the past the central bank has been doing when growth has been quite low and consumption has been low. I think beyond growth, what's maybe worrying is the consumption coming off as well. So what the central bank has done in the past probably has used this opportunity to reduce rates, cut interest rates, or maybe some other measures to sort of boost consumption and then boost growth thereon. But I think that statement, and I hope the central bank follows through on it, is to play maybe a more of a watch and wait situation rather than sort of maybe cutting rates, trying to boost up growth artificially. And that I think will be a key thing going forward into next year as well, because you need to see the reform.
Next year it's going to be tough for the central bank to cut rates, given that the indication is that interest rates will be going up in the United States. Does that mean that in Sri Lanka as well we'll be seeing a hike in the policy rates?
So it's not, this is the, I think, common misconception that's there probably widely, is that it's not the rate, it's not the fact that the US is increasing interest rate that really matters. It's the pace at which they're increasing. So at the end of last year, the pace for 2017 was 3 rate hikes. So you had 25 basis points, 0.25, 0.25. Together you had 0.75 increase during this year. That's what they communicated, and that's what happened. So markets weren't shocked. They sort of guided global markets, and that sort of benefited Sri Lanka as well, because even though there was a rate increase in the US, foreigners, send investment to the local government securities, which is a key part of this whole equation in terms of interest rates domestically. So next year as well, I think what's more important to see is, again, they've said another 3 hikes, whether they'll stick to it, if there's any divergence to it. If there is 4, 5, which maybe not communicated, then only I think the problem will be, because naturally what we've seen is if there's a situation where there is a sudden increase or the markets are not ready for it, then only there is a bit of volatility, and maybe Sri Lanka needs to react towards it.
Sharon, the thing is, the central bank governor was talking about, you were talking about, interest rates and how the central bank can't cut rates to artificially sort of boost consumption and growth. But the thing is, we've also seen the United States. The indication is that there will be further hikes in the policy rates there, which means that it's going to be very difficult anyway for the Central Bank of Sri Lanka to be looking at lowering rates. And on the other hand, if they do increase rates here in Sri Lanka, that might be a fetter on consumption and growth. So it's almost like a catch-22 situation, isn't it?
That's an interesting point, because what's really important, even with the Fed and other central banks, is we're entering an environment where global interest rates are going up. But with the Fed, what they've done, especially in the last 2 years, is communicate, where they sort of see interest rates in the next year. So at the end of 2016, they forecasted about 3 policy rate increases in 2017, and that was delivered. With the economy also moving in that direction. And Sri Lanka only just saw 1 policy rate increase in March, despite the other concerns that they had with inflation as well as private sector credit growth. So next year as well, there's about 3 projected hikes as well. So if it goes according to that plan, and maybe the US economy does not, the growth sort of doesn't grow at a pace faster than expected, labor doesn't pick up as much as they expect, because there are changes there as well with their fiscal reforms as well and the tax reforms. Then if it's only 3, then Sri Lanka, central bank will naturally not have to adjust as well, because it's already priced in. And that's the important part. It's already priced in with investors that there are 3. If there are more than 3 and it's not communicated, then that's where the problem lies, and there might be a flight of capital, and then interest rates here might have to adjust. But I think the central bank should be prioritizing more on growth, because that has come off quite weak. And in particular, if we do have unforeseen adverse weather conditions as well next year as well, that will further dampen the growth outlook, which will not be helped if you increase interest rate. So I think the central bank should maybe err on the side of caution rather than trying to preempt maybe hikes or cuts at this point.
When you talk about an economy that like Sri Lanka, a developing country's economy, and you hear a growth rate like 3.7%, for the common layperson, that's very alarming. Are you alarmed?
Well, it's not the 6-7% that we saw earlier on. But I think what has happened in the past is when we've had even these 6-7%, it's not been sustainable over a longer period of time. So if in these 3 to 4 years, in this 3 to 4% environment, if we're able to set the building blocks for better growth in the next few years, then I'm not alarmed. But if right now with this level of growth, if I don't see too many growth drivers, then I'll be a bit alarmed, which is what we're sort of seeing right now. We're not seeing enough growth drivers. Agriculture is contracting. The only sectors that are maybe expanding is construction and maybe other retail trade and things like that. But beyond that, we need to see other growth drivers emerging, and that's where things like exports need to take in bigger say. We need high level of FDI. So we're seeing the policy blocks maybe being put in place. But I'll take 3 to 4% growth if that will sort of maybe enable a 5% long-run growth. which is what I think the government also maybe envisages, without having these artificial 6-7%, which are not sustainable, and the economy has to go through an interest rate shock or an exchange rate shock, which has been the past episodes.
We're going for a short commercial break, but that's an interesting point that I want to touch on in our final segment coming up right after this. Should government divestment be the catalyst for growth? Welcome back to BizFirst Review 360. It's our year-end show. We're talking about 2017 in review and what we can expect from 2018. On the previous segment, we were talking about how while the government has sort of taken on a reform agenda, and there are several important strategy documents that we are expecting, like the National Export Strategy and even the President's Sustainable Vision 2030 strategic plan that will be released in January, hopefully. While all of that is to come, you noted correctly that there hasn't been much change in the area of state-owned enterprises. Now, plans for divestment of government ownership have been spoken of, but there hasn't been any sort of implementation. Should divestment, should state divestment from these enterprises be the catalyst for sort of economic growth in a country?
So it can be one of the catalysts, because you are releasing the government essentially of funds that they could allocate elsewhere towards maybe education, infrastructure, things like that, whereas government needs to get into some of the SOEs that are not doing too well, either restructure them, recapitalize them, put more money into it, guarantee their debt. So you're basically tying up the government towards these SOEs. But if you release or reduce some of the shareholdings of these SOEs, you are sending a signal to the market, the capital market as well, that the government is serious in terms of putting out some of these big SOEs, because they have big capital base. It'll increase liquidity and things like that, and foreigners also will be encouraged, because that's more, you're sort of allowing those to be more market driven. And the other part of it is the monies or the proceeds that can come from these can actually maybe help stabilize on the fiscal side, reduce some of the debt, release some of that capital maybe to other things like education, healthcare, that maybe are not receiving the due allocations. And focus could be on getting certain things right without trying to get all of them right, and failing on multiple fronts. So there could be a lot of catalyst within government in terms of improving productivity, getting their focus right, and private sector could take on that and create the growth, create the jobs that's required.
Based on current trends, based on how the country has been progressing over the past couple of years, and the plans that are expected to be implemented next year, including the new inland revenue, the revenue collection, which will start from the 1st of April, and the liberalizing of the shipping and logistics sector, for example. With all of these moves that have been planned, as a conservative estimate, where would you place economic growth in 2018?
So I would say, if we don't have the agricultural setbacks that we've had with the droughts, I would say just based on that base effect, as well as
imagine
exports.
That drought and floods alternatively have become the new weather pattern for Sri Lanka.
I mean, I would start off, I would go with about a 4.5 to 5% would be the range I would put it at.
The reason that I ask this question is, I mean, it's expected that would be a sort of a conservative estimate if things go right, that you would be able to hit that 4.5, maybe 5%. But if you look at the Vision 2025 sort of manifesto almost, and the policy document, the Vision 2025 economic policy document of where Sri Lanka, where the government wants to see Sri Lanka come 2025. Can you do that with a 4.5% economic growth rate?
Not in the near, not for 2018, but over a long period of time, you need to get 7-8%. So I think that's slightly ambitious.
You'll have to be hitting about maybe 11 or 12% in 2020.
Yeah, exactly, to sort of compensate for it. So what's important, I think, for next year is to build on 2017, what you've done in the reform agenda, and get more growth enablers. Exports to do better, more FDI, and that will enable growth itself, and getting some of the SOE reforms done as well. So a collective of those, plus maybe a rebound in agriculture, you could see a better level of growth. But what's also important is consumption doing much better as well next year, because that's basically the heartbeat of the economy as well.
So, as you mentioned, it's very important that these policies are adhered to, that correct policies are formulated and that they are implemented, and that there is consistency. Another complaint that would be put forward by detractors of the government is that the government has shown itself to be very malleable, moving a bit wobbly, let's say. Specifically, if you take an example, the whole CITEM issue. You had a Supreme Court verdict which protesters didn't really care much for. And in the face of the mounting protests, the government sort of devised a solution. That solution has also proven to be unsatisfactory for those who are opposed to this institute. And it looks like the government is almost caving in. Do you think that kind of an attitude towards governance can take this government towards its grand visions?
Well, to take some of those hard decisions on, you need to take, I think, bold decisions, which in itself will maybe realize some of the visions in the grand 2025 scheme of things. But I don't think they have the space to take most of those decisions. The political will and maybe the political capital in itself is missing. And if you were to take some of the other economic reforms that need to be done, that is required as well. So I think maybe up until the election, maybe we won't see such big level of risk on reforms being taken on the local government elections. But maybe after that, seeing where things lie.
But this is where the issue lies, isn't it? So from now until 2020, you're going to see a series of elections.
Yeah.
So if the government's plan is to capitulate in favor of political ambitions, or to maintain political capital, then they'll be maintaining that political capital right up to 2020 and the general and presidential elections, because you've got provincial council elections happening in between as well, which they wouldn't want to lose. Yeah. So my question is, given the reality that you're going to see a series of elections, does that mean that the reform agenda will be put on the back burner?
I don't think it will be, but I think you won't. If you had 10 items, maybe 5 of them might get done, and that will really depend on the political capital and will. I mean, the sale of or the leasing agreement of the Hamad report sort of signal that it can be done, but it will take time, because it was, in the end, I think both coalition partners are coming together to sort of get that done as well. So that showed there is a willingness to take maybe some of the more controversial or big ticket reforms to get it done, but that will take time. So if they sort of maybe prioritize, okay, these are the 5 main things that we want to get done between now until the next election, and work on it without trying to work on multiple fronts, I think there could be a lot of wins for the economy to take it even beyond 2020. But to take to actually realize the vision 2025, I think you would need some bold decisions that will need to be taken, which will be difficult. In the current context.
Difficult and bold decisions that need to be taken. Shiran Fernando, thank you very much. As always, it's a pleasure to have you. I look forward to having you at the beginning of 2018 as well. We can discuss the course that the government needs to chart throughout the year. That's our show, our final show for this year. Shiran, would you like to share a New Year's message with the people, the government?
I think they should build on what has sort of maybe been achieved, and make sure that the tangible benefits are seen by not only us, probably in the media or policymakers, but with the households and eventually with the SMEs and the businesses as well. So that's a key thing that we need to take. We need to take the momentum forward, not take a step backward on it.
Thank you very much, Gerard.
Thank you, Nadim.
So there you go. The key thing, even when it comes to reforms, is to understand who you are carrying out these reforms for. Who do you want to, who needs to benefit from the reform agenda? And probably one final thing, get it done.
Exactly.
Here's wishing you all a very happy new year, good night, and good luck.